Hi everyone, welcome to my channel, and today let's talk about the Wall Street and just the US stock market in general for the past months. So, the US stocks closed slightly higher on Tuesday, with three major indexes posting their record for the fourth straight month of gains. The US core PCE price posted the biggest rise in a year in January, supporting a cautious rate cut strategy by Fed policymakers. Markets are continuing to waiting for Fed officials' comments on their further perspective about the timing for a rate cut. Thursday was the last trading day in February, with the Dow up 2.21% in February, Nasdaq up to 6.12%, and S&P 500 up 5.17%. All three major indices posted gains for the fourth straight month. Much of the rally in early 2024 was due to the AI boom, but the decline in recent trading days has raised questions about the sustainability of the AI-driven rebound. Piper Sandler Chief Market Technical Analyst Craig Johnson sees a 10% correction soon due to technical signals in the market that stocks are not ready for further gains. Goldman strategy expert Scott Rubner said it has proved impossible to predict the top of the rally, he said. The retail traders were drawn to the rally as a proper scenario when the economy was neither hot or cold, prompting analysts to quickly raise their year-end targets. According to an expert, the last day of the February is likely to become affected by the month-end rebalancing than data, with inflation trends already reflected in the market after this month's consumer and producer price report. It makes sense to focus on PCE because that's what the Fed prefers, but it's basically a foregone conclusion. The market will be more affected by some rebalancing of capital flows, as stocks have significantly outperformed bonds this year. Overall, the PCE, including the volatile food and energy categories, rose 0.3% month-on-month and 2.4% from a year earlier, versus expectations of 2.4%, according to the Commerce Department. Excluding food and energy costs, the core PCE rose 0.4% from the previous month, and it has been the biggest increase since February 2023. And the core PCE index also rose 2.8% in January from January last year, the smallest increase since March 2021. The data showed an unexpected 1% month-on-month increase in personal income, above the expectations of 0.3%. Personnel spending fell 0.1%, compared with expectations for a 0.2% increase. Another data put U.S. jobless claims at 215,000 in the week ended February 24th, compared with 2010,000 expected and 2001,000 previously. Data released on Thursday shows that inflation-adjusted consumer spending fell slightly in January after a strong holiday shopping season. Actual disposable income, the main support for spending, is little changed. Atlanta Fed President that reiterated on Thursday that a rate cut this summer might be appropriate. He said it might be appropriate for the Fed to cut interest rates based on its inflation outlook this summer. He made comments after the PCE was released. It shows that the Fed's favored core inflation measure and has given its biggest rise in nearly a year in January. He also said, but the slope of the line is still down the side, he said. I think it might be appropriate to start cutting interest rates in my expectations if things follow the summer. San Francisco Federal Reserve Bank President Murray Daly said central bank policymakers were ready to cut interest rates if necessary, but she also stressed that a strong economy determines the urgent need for no rate cut. There's no imminent risk to the economy, and we are ready to act and adjust to the data requirements. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.